Hi, my name is Dustin Miles, and today we are excited to have Rick Martin today. And yeah, known him for a little bit of time here, and just yeah, really excited to have uh, have Rick here. And so I'll go ahead and just hand it off to Rick, let him introduce himself, and then we'll jump into the interview. All right, Rick. Yeah, love to hear if you could just tell us a little bit about yourself.
All right. Well, from a personal standpoint, I hail from Redondo Beach, originally from Seattle, Washington, but moved to the LA area, um, man, like 24 years ago, I would say, somewhere thereabouts. Didn't like LA always, but once we got out closer to the beach, we started to like it. We is my wife. We have two boys, and have an unexpected surprise arriving here in early March. So we're going to be a family of five here soon enough, which is crazy but exciting all at once. I was not always in real estate, but pretty much always had it as a side hustle since about 1999. Um, I graduated from the UW, was doing various things, wasn't too enchanted with my career at that time. So life took a change around the turn of the century. Went away to school, film school actually, and I had just bought my first house. And since I was moving away, I was like, well, I'm not going to sell this right away. So that was my first taste of being a landlord. And the light bulb went off because I was getting those rent checks, and that was coming in handy being, a starving student. Um, I didn't move too far away. I was up in Vancouver, British Columbia, so I could come down and sort of self-manage at that time. Um, but I I continued to invest. I thought, well, I'm going to do this on the side. This will be a good form of investing, in addition to just doing the stocks. And I thought I was going to buy a property once a year. That didn't turn out to be the case. You had to have capital. So there was a bit of a lull in between the time I bought that house. I think my next house was in Vegas. It was actually my first out-of-state experience. Um, and slowly but surely kind of got into smaller multifamily. Didn't do larger multifamily till much later, but we can get into that.
Awesome. Yeah, that's I feel like that's how a lot of people kind of get into real estate. Either it's their first house, then they end up renting it out, or I know I got into real estate, single family wise as well. So super cool. So kind of on that note, so when did you get into multifamily, kind of larger
I don't
scale?
think, yeah, I think it was a bit of a lull in between single and uh, even small multifamily. Small multifamily, I partnered on a couple duplexes um, down in Southern California, down in Palm Desert. Didn't do my first uh, apartment, which was small, 12 units, until I think it was like 2017. So quite a change. I don't know why it took me so long. I wasn't it was different back in the day when you bought a house. You didn't have bigger pockets and all that. You just kind of
Yeah.
learned from your property manager and whatnot, but started to catch wind of things, once the internet was up and running full strength, and found out about bigger pockets and whatnot. But to answer your question in terms of large multifamily, I think my first deal was 2018, and that was in Columbus, Ohio.
Oh, okay. Gotcha. Okay. So you're located in LA, Redondo Beach, and then so where all do you invest? And then kind of if you have some favorite cities that you like to invest in or states that you like to invest in as a GP.
Yeah, I was doing my own stuff, smaller multifamily, small apartments in the Midwest, so I thought that was where I
Mm.
was going to stick around and stay. I mentioned the one in Columbus, Ohio, but it was getting to be, the logistics were more and more challenging. So I was looking in, the state, close to California. And I wasn't going to invest in California. The numbers just weren't working. So I was looking in Tucson, Arizona, doing quite a bit of networking there with brokers and flying back and forth. Still, um, wasn't getting the traction that I wanted, and so eventually just started partnering with people in the Texas market, um, Texas and Southeast. I did a deal in Augusta, Georgia that was like okay. It was a good learning experience. Didn't go great, but it
Mm,
was didn't lose money either. It's still actually alive. We haven't sold that thing. Did some deals in Sarasota, Bradenton market that have been a little bit of everything. Some have been great. Others have been challenges with the insurance and whatnot
mm,
that's happening there. Take uh, every insurance in every market and double it when you're in Florida because of the
ooh,
hurricane threats, and
wow.
um, sometimes it's not even available. But and then I have done a deal in Arizona. So for the most part, stick around Texas, Arizona, and still have my eye on the Southeast.
Gotcha. Okay. And I know myself personally, I feel like I've kind of worn every hat on the GP side, and definitely have some roles I like, and some, right now we're in tax season, so that's just forms and loan docs, not necessarily my favorite, but do
Hmm.
what's your role as a GP, and what do you like to do?
Hmm. Yeah, I think starting out, what was really thrilling and exciting was acquisitions. I
Mm,
liked traveling to the market and meeting the brokers and talking to the brokers and talking, you know, talking shop. It was all it's exciting, but it's also very competitive and very very difficult. You have to have I not being in the market. It's just tough. You're not
yep.
there to walk the property, so you have to have some boots on the ground to say, hey, can you drive by this property and have a look for me? So I sort of got away from that and still really enjoyed like doing sub-market analysis.
Hmm.
It's still one of my favorite things to do, just to kind of dice up a market quickly. And I'm always a second set of eyes for underwriting. Still do underwriting.
Hmm.
Um, I think it's um, more efficient to do the who not how version. Have I
Yeah.
delegate a lot of that out, um, get some good guidance. I have a really experienced. Uh, he's been a commercial underwriter for years. He did it for banks and really trust his judgment. We go back and forth. Um, and then I like doing the due diligence. I like traveling to the market, meeting with the team. That's always fun.
Yeah.
It's good to see everybody, touch the property, really get a feel for, in a sense for what the property's like. Um, but I spend a lot of time, just guiding investors, and it's still one of my favorite things to do. I like getting on the horn and hearing people's stories, um, telling about our philosophy, what our buy box is, and I like creating content.
Hmm.
Uh, there's I don't know. I still really enjoy writing, and that's where I get a lot of clarity. So I spend a lot of my time doing content, whether it be writing or video content, that sort of thing.
Oh, that's cool. Yeah. Yeah. Sound you have quite a bit of experience in a bunch of different things. So that's cool, and sure comes in handy, and nice that you have kind of that the underwriting soundboard with your buddy and all that too. So that's cool.
Hmm.
Um, kind of curious. There's number of just kind of GPs indicators out there and things like that. Once one if the LPs are kind of networked and kind of getting some of the circles, it just it gets interesting as far as we're always kind of thinking about how do we set ourselves apart, and so we do meetups, and we do there's a lot of processes and things like that we kind of have, but kind of curious to hear from you and your business, if there's anything that you do or you can think of that kind of sets you apart, maybe from some other folks or other options. Maybe it's Wall Street, or maybe it's another syndicator.
Hmm. Well, I've been told that um, I have a pretty nice personal approach. I think you get a lot of deals in your inbox, right? And
Mhm.
sometimes you're like, who are these people? You
Yeah, yeah.
know, like, do I know these people? I think everybody thinks that you can just do sort of this automated process where you can send out a deal or a deal looks good and people are going to invest. And I learned a long time ago. I remember one of my first investors was said, telling me, I don't really like to be a part of a list. He turned out to be kind of a pain in the butt because I
Yeah.
literally would have to, I would let everybody else know about the deal, and then I'd have to call him. But I've sort of taken that approach, and I actually do, with my core investors, I try to give them a heads up
Mm.
early on in the process so they're not feeling rushed, give them my own personal take on the deal. Um, and I actually, I'll pick up a call, if it's a Sunday night at dinner time. It sounds kind of like, managing tenants, but I do believe in being there for the investor. And if I
Mm.
don't have the answer, then I just want to let them know that I got their message,
Yeah.
and I'll find out their answer. If I don't have it right away, I'll let them know tomorrow. So just kind of give them that kind of personalized concierge type
Yeah.
of
Yeah. That's
approach.
cool. Awesome. Yeah, you kind of talked about your or mentioned your referred to your buy box earlier. Just kind of curious, what are you looking for in a deal? Any characteristics? Are you, some people are only doing C class stuff, some people A and B, some people only B stuff, some people certain states. So kind of curious to hear about what your buy box looks like.
Yeah. Well, territory I kind of mentioned,
Yep.
it sounds so general, but the Sun Belt, and you know, more specifically Texas, Arizona. And I look for mid 80s and above, but to be quite honest, I don't do a lot of A class. I think there's, more value to be added in a nice solid 80s or a B vintage. So maybe upper 90s, lower 2000s is that the good range I like to be in. But
Mm.
we have done some brand new stuff, not new development, but more like A class, luxury A class type.
Right.
Um, and try to keep it 200 units and above, like the garden style. I like compelling amenities, or at least the potential to do so. Um, and then in terms of like the things I really look for, in terms of just mitigating downside risk, I don't want there to be a ton of competing supply. It has to be recession resistant, like a strong tenant base with better job prospects in the face of a recession, for instance. Definitely no natural disasters, can't have that.
Right.
Don't look for high crime, obviously. Some people they like going into war zones, but that's not me.
Yeah. Yeah. Yeah, I've heard. I've never been. There's one deal I had that was probably had more crime in that area than anticipated. That was kind of one of my first deals, but so learn from that.
Yeah.
but yeah,
And
and
then,
oh, go
I
ahead.
mean, if I
Sorry.
could add to that, is that like sometimes those crime reports, they'll be a little over the top. And if you really dig down deeper, you'll
Sure.
find out there's not a lot of violent crime going on. It's maybe just some petty theft. So you do have to kind of read between the lines on some of that stuff. You can't just say, oh, it's a D, next. That you have to kind of dig deeper to find out. But in general, hey, you want your tenants to feel secure. Generally, if there's a lot of crime in the area, there's not going to be a lot of good retail, a lot of good amenities, schools in general.
Yep.
It's tough to get into good school districts, but yeah, it's a good mark.
Yep. Yep. Good points all around. So, you've probably gotten some interesting questions from LPs and things like that, I don't know. I think there's, at least in my mind, there's probably a handful of things that an LP should be asking. You or I or a GP as far as what to look for in a deal, but I know one question that was interesting. They were, hey, what if you get run over by a bus, or so no questions are kind of off off limits, but Yeah, kind of curious. What should LPs kind of be asking you, about whenever they're looking at a deal, or some things that you kind of wish they would ask.
Hmm. That question you mentioned, that's a good one. I've been
Yeah,
asked that as well. It's important.
it is.
Um,
Yeah.
are we talking deal specific? Because obviously, they want to vet the operator, um, and then secondly, the market. You don't want to get into Bumble. I won't say the word, but you want to be in my estimation, a major market with
Hmm.
a good diverse economy, strong population and income growth, those sorts of things. But if we move beyond that, I think it's important that they understand the debt on the deal
Hmm.
because that's where a lot of the risk lies, as we found out this past year or and a half or whatever it's been. I think they should understand how that works, the loan term, kind of the structure of it. Like we've gotten into a deal, a loan product lately that I really like. It's a 7-year term, but you don't have to pay prepayments after year five, that kind of thing. I think they should have some understanding about that. And then, where does it fall in the stack of rental and sales comps? If you're at the top of the sales comps, that's probably not good. Um, Me personally, I like to, like, one of the first things I look at to see a deal's potential is just current rents versus market rents. What's the
Hmm.
delta there? And if
Yep.
there's a large delta, then there's a lot of potential there. And sales comps, yeah, you definitely want to see what the price per door is. Where are these sales comps? Are they within a mile away? Are they far away? So I try to guide them through all the aspects of the investment summary, all the details, because sometimes they don't really quite understand it. And then, of course, I'll answer specifics or maybe even guide them in the operating agreement and make sure they understand the deal structure.
Yeah, no, that's yeah, a lot of good points. I mean, the sales comps, it could be, as we were talking about earlier, as far as crime or schools or whatever, a lot of times there's a few streets or definitely freeways can kind of divide, so I mean, it could be the deals mile apart from one of the sales comps, but it's on the other side of the freeway and completely different schools, completely different home values. And so you're like, so yeah, that's yeah, very good point. I know one thing that I always kind of like to look at just it more of a it's probably I look at reversion cap rate and things like that, but I kind of look at what their expected sales price is in 5 years, and does that make sense? Does that if you're
Absolutely.
buying is that even reasonable? So if it's a C class deal or maybe even a B deal, just depends on the area, and your exit sales price is where the new stuff is coming in at, or even above that, it's like I don't uh not
Yeah.
not sure if
Yeah.
that makes sense. So
Oh,
but
yeah. That's the crystal ball, right? Like I think exit caps and
yeah,
exit sale price,
it's
those are really the toughest to predict,
yeah.
and it's really anyone's guess. I mean, of course, you could figure in the net operating income, how revenues increase every year, but um, it is tricky. But I know what you mean. I'll look at an exit sales price. I'm like, really? I don't know. It's really going to rise that much.
Right.
But I
Yeah.
I got a question for you in
Sure.
terms of um, one of the main metrics I'll look at is just like median household income
Mm.
in the area of the property, and you know, a lot of LPs, they don't have access to CoStar reports, so
Mhm.
they might go to something. At least I recommend that they go something like Justice Maps or Rich Blocks, Poor Blocks, which are like free resources that they can kind of check, some of the metrics. And if you click on the actual tract where the property exists, it might say, median household income low, like
Mm.
43,000 or something, or
Yeah.
or even lower. But if you click just a block over or the track right over or all around it, it might have, you know, pushing 70,000 median household income.
Yep.
So do you do you think that local track matters? I mean, it's not as if all the renters are coming from that track, um, or do you pay more closer to attention to like a square mile, square 5 mile radius?
Yeah, I know, I know CoStar does. I don't remember a 3 mile radius.
Hmm. Yeah.
I think, and I can't remember. Sometimes they do a 1 mile, sometimes, anyways. But
Hmm.
no, I know I see a 3 mile. So we'll kind of we show, typically that, when we're talking to investors, we show that and kind of, inform them of that. Our in general, I'd say in DFW, we're probably, mid 60s, kind of
Hmm.
median household income. I'd say Houston, because we're buying a little newer product in Houston, so we're, I'd say we're 70s and north of
Right.
that. So and most of that's kind of north of that. But yeah, we get, from CoStar. I know, I can't remember what the best neighborhoods. I know I know for crime we look at community crime map. I can't remember what best neighborhoods looks like in terms of. I think they do have some household income and stuff as well
Hmm.
there. But yeah, it's mainly from CoStar though in Real Page. So yeah,
Yeah.
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 Um,
Flip the script on you. I asked you a
Yeah,
question.
no, it's good. So kind of curious. We, talked about a little bit earlier. Just I guess maybe if you want to talk about, I know that it sounds like there's quite a few things that you enjoy, but some things maybe you like the most about multifamily, and saying, maybe if there's something, maybe not so much. One thing that we really like doing, and it's fun and it's rewarding, and then there's usually some good pictures from it too. Is we like doing community events for our residents, and so that's, it's kind of our way of giving back, and because the properties we're buying, they're not. I mean, they're nice, but they're not, like not high end. So
Right.
a lot of stuff is very much appreciated, whether it's, just taco truck or shaved ice or whatever. So anyways, just kind of curious, of maybe some things that you like, about multifamily, and maybe something maybe you don't like, but yeah, so yeah, I'll let you take it from there.
Yeah. Oh, what you mentioned is it's true. That if you're just focusing on the bottom line, it's tough to feel too gratified about that.
Yeah.
Um, so I do like the community events as well. I like I genuinely like providing uh, them a step up in like the quality of life. We just did a deal that was a tax abatement deal.
Mm,
So we got 50% of the property taxes uh, taken off, which enabled us to, well, actually, part of the tax abatement deal was we had to put at least 5,000 per door.
mm,
We ended up putting seven, but at the end of the day, we still hit our numbers, but we didn't have to raise rent.
mm,
And we were improving their units. So it was total win-win. And we as investors, we were going to do well. We're gonna profit, projections wise, and they're gonna have a better community. So that's kind of like the ultimate if you can get kind of a win-win situation. And just like bigger picture, I just like, I mean, people talk about, uh, you know, well, commercial office being in trouble, but industrial is
mhm,
pretty much the hot topic these days. A lot of people look to that, or maybe pivoting. I still like multifamily because, and it's very cliche, but having a roof over your head is just never going to go out of style. So I think it's going to continue to be a recession resistant asset. And things have been more challenging this past year, but it's not making me waver. I'm going to stick to multifamily because I think it's always going to be around. And especially now with this affordability crisis seemingly never ending,
Yeah.
there's always going to be a need for housing. So just broad picture, I just feel secure in the asset class.
Yeah. Awesome. And curious, did I was in a few mentoring programs, not in one now, but were have you ever been in a mentoring program or anything like that? Kind of part of your journey?
Thought about it. I think I think it might be different if your mentor, if you don't live in the market where the mentor is. At
Mm.
least that's the way I felt. I wanted to be
Yeah.
able to, if let's say if I lived in Dallas, I could join a mentoring program and we could,
Or
you know,
five. Yeah.
yeah, exactly. And we could underwrite deals right in our market,
Hmm.
go meet with the brokers right in our market. I was having a challenge being in LA and thinking of spending, you know, gosh, the price tags are pretty
Yeah.
steep.
Hmm.
So I kind of went a different route. I just went consistently joining masterminds that sometimes were, free, and then just continually networking and continually educating. Yeah, I was tempted. I came close. I won't lie to you, but I never pulled the trigger on a mentoring program. Just continue to look for masterminds and I meet a lot of smart people like yourself. That we continue just to learn from one another. And
Yeah. Yeah. It's kind of, it's interesting. I don't know. You brought up a good point. Like, I don't know. It would be difficult for me to fork out, more difficult for me to fork out the money because it is expensive. If I didn't live near kind of where, I live in DFW. So, and there's a lot of options. And so yeah, it's a good point. I never thought about it that way. So,
I I think being from California,
hmm.
a lot of the peers I was witnessing, they would be joining these mentoring programs, but at the end of the day, they were just coming in more on the capital raising side.
Mm.
So
Yeah.
I started to see that, and it actually kind of suited my lifestyle with young children and stuff.
Yeah.
I, I'm not the most detail oriented. I wouldn't make the best asset manager, and I knew that.
Mm.
So if I was going to come in on the equity side, the raising capital side, then I did sort of get mentorship in that regard.
Mm.
So I think you have to kind of understand what hat you're going to wear within the syndication, and understand what the mentorship is offering. If they're offering asset management, well, you better get with a good asset management program. And like I say, you got to be near that asset to
Yeah.
manage that asset properly and
Yeah.
have the time. I think a lot of people they'll have full-time jobs and they'll think, oh, I'm going to manage this asset. I think that's risky for your investors.
Yeah. Yep. 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 I agree. Although I did, I started out 10 years ago, or I guess 12, but started I was the asset manager and it was, I lived pretty darn close to it, so that helped a lot. But um anyways,
Didn't you do everything?
I
I seem to
did.
recall,
Yeah, it was hard. I
which
was
is,
I
I
was
mean, that is commendable, man.
I was telling someone, just because of all the resources that we have, community crime app, there's all these online resources and all this software and all this other stuff. There's no way my myself today, I'm sorry, my 2014 self could compete with myself today. Not a chance. I just had I've there's too many resources now. So anyways, but don't
I
want
wrote down community crime map because I use crime grade, but I'm going to look into community crime map. That sounds like you like that one.
Yeah, I don't believe they have, for whatever reason, their data is not linked for Fort Worth, but they are Houston, and then Dallas for sure. So, and they probably, yeah, I haven't looked at Phoenix or Tucson, but would, probably over there too. So, um, well, I'm kind of curious, kind of switching gears a little bit. If you have any favorite books, podcasts you'd like to share, in particular, like if you there's a book that you've read more than once. I don't know if you're a voracious reader or if whatever you roll, but I feel like if you've read a book more than once, then at least for me, I would really, like I really like it if it's something I've read more than once. So, anyways, just yeah, kind of curious if there's any resources, books, podcasts that you really enjoy.
Yeah. That's that's a great question. Like, have you reread a book? I was just speaking with someone on this a couple weeks ago that I haven't, and I probably should.
Mm,
Like, what I do is if it's a sort of like a business book or a mindset book, I'll take notes.
mm,
Or like with the Kindle generation now, you can kind of highlight and save highlights, and then you can always review, which I do.
mm.
But you're catching me at a time where I was like, I want to break from reading
Yeah.
uh, real estate books. So I've been reading more like fiction, like just read The Boys in the Boat, Facing the Mountain. Uh, what else have I read? The Midnight Library. These are all kind of like pleasure reading. Just felt good to read those.
Oh,
But
cool.
from
Okay.
from a mindset standpoint, I think Miracle Morning
Mm,
is hard to beat, and
yeah.
Atomic Habits is good.
Yeah.
And on the podcasting front, have you heard of the book The Subtle Art of Not Giving a can I say it on the podcast?
Oh, that's total.
Not giving a fudge.
Yeah. Yeah.
Um, he has a podcast that's pretty irreverent,
Oh, okay.
entertaining, and then the Knowledge Project is a real good business one. I still think Whitney Sewell's podcast is good when it comes to syndication, and Hunter Thompson's podcast is also good. There was one that was kind of name escapes me. If I think of it, I'll let you know. But yeah, those are a few.
Oh, cool. Okay. That's awesome. Well, kind of we're earlier in the year and all that. And so just kind of curious, if you have any, just kind of where you see yourself in 5 years or any particular goals you want to share. So yeah, I'd love to hear what that vision looks like for you.
Definitely sitting on a beach with a Mai Tai, I think 5 years from now. That sounds pretty good.
Yeah. Awesome.
Um, no, but probably not. Especially with a bun in the oven. What I Where I'd really like to be is have a consistent pipeline of good, solid deals and a robust, healthy pool of investors who understand multifamily and know a good deal when they see it and are ready to invest. And because it's been, it was a good upward trajectory for me, but um, this the start of this year has been a little challenging. It just reminds me, got to keep working,
Hmm.
and you got to step up your game,
Yep.
um, and not use, the current market situation as an excuse to not be able to raise capital. So, it just a reminder that, in 5 years, I want to be at a place where, again, I have healthy deals with experienced operators and a pool of investors who get it and are ready to invest.
Awesome. And any just kind of last any advice that you would give to we get people all the time are like, hey, how do I become a GP? Any advice? So if you have any advice for aspiring GPs?
Yeah, I mean, definitely always self scout and understand what you bring to the table. And if you don't bring much, work on that because really you should just start from a place where I can add value, as opposed to, you know, hey, can I buy you lunch and can I pick
Right.
your brain? Just
Yeah. Yeah.
you wanna make sure that you bring something to the team. So I would start there, and along those lines, always network, continually network, even if you don't like it or you're not comfortable doing it, just do it. Like I don't know about you, but the larger conferences, sometimes you walk into the room like, oh my God, where do I start?
Yeah.
But you do it, right? You need to do it. You need to meet people in person, and then just never stop educating yourself and be patient. You do all those things, and things will fall into place, I think.
Awesome. Well, great. How do people get a hold of you? If you want to give out your website or email or whatever's best for you. So, yeah, I'd love to for people to be able to get in touch with you.
Right on. Well, I think the easiest way, yeah, is just go to my website, fortressfederation.com, and you'll see a button up there where you can schedule a call. And I love talking shop. So just, yeah, give me a call, fortressfederation.com.
Awesome. All right. Well, Rick, really appreciate your time. Great seeing you again, and we'll talk soon. Thank you. See
Thanks,
ya.
Dustin. Appreciate it.